If you're willing, I'd like to ask you, Dale Wachowski, what is the biggest risk?
Yeah, so boy, I could speak on this topic for hours, but I'll start by just offering a general thought, and it's nothing that that I'm sure your listeners haven't heard already and know very well, but risk is inherent in our business. Um, Being in the real estate business as an investor is we're no strangers to risk, and as developers, I'm part of a pretty optimistic lot, and I think you probably heard it said before that you have to be a dreamer and you have to be a very an optimist to be a developer, and I would say that I'm probably the exact opposite of that. So I tend to focus on the downside, and my team here has to always temper that, because I'm always pointing out the risks inherent in everything that we do. But I'd say that speaking outside of the risk inherent and that inherent in the insurance industry, I'm gonna go to kind of market risks right now, and I'm going to tell you that to our conversation earlier, my biggest concern is around our office users, and are we going to be able to retain them? Will we go back to the office? What form will we go back to the office in? What's it going to cost me, to build out space that is attractive to my office users? And what do we do during this time of transition? When your users are only looking to renew on a short-term basis, which is really what's happening right now. Um, so what the impact of all of that might be is that capital is becoming much less scarce, for office owners and developers, and because the capital markets are pricing in the risk inherent in that business, and so I see the development of capital, playing in significantly into the office market, um, and um, and so I also see on the residential side. I'm going to move to another area of our business, and this translates into both our market rate, traditional multifamily users, of any age, right through a multi-generational platform that will include senior housing, but affordability is a major factor. And while we were not acquiring bundles of properties, in multifamily, over the course of the last 5 years, we certainly were looking at, the trades that were being done out there. And what had happened is we took an affordable stock, and we said, okay, we're gonna improve a kitchen, or we're gonna improve the common areas, and what we're gonna do is we're gonna increase the rent by 20%. Okay, and now you factor in inflation, and what's that going to do to the housing stock that's out there that would have otherwise been affordable? And then the other factor is, how are we going to build housing that that our tenants can afford, given inflationary pressures? So I'd say that there's a lot of pressure on the residential space, in that we're going to have to be responsive to the needs of the general population, which is, how do I afford to live? And maybe that's why multifamily or rental housing is so attractive, and probably the reason why we're looking at single family rentals, as an alternative to single family ownership. And so what I see, as a trend right now, and this is intergenerational, is that people are underemployed, and so that'll probably change. But then, kind of moving over to the senior space, what I've seen as a trend is that many of the boomers throughout this recession, or throughout the pandemic, um, um, by the way, I happen to believe that we're probably in a recession right now, but at least the real estate recession. But that said, many of the boomers have retired, or they've left the workforce, and then those same boomers that we're trying to attract into our senior business, they're not like the greatest generation, the World War II generation, they don't have savings. They don't have equity in their homes. They don't have pensions, and they don't have 401ks, which is what really drove our business and enabled us to maintain occupancy levels, over the course of the last 10 years. So we have very few of those residents left, and very few of our residents now, have the kind of money that they would need to move into one of our properties. So what's happening is that they're moving in on a need-driven basis, and they're moving in at, 85 rather than 75, which is where they were 13 years ago when I came into the business. And so, and because of that, they have more health needs. So we have to find employees to serve their needs. Okay. And those employees aren't out there. So, how do you mitigate that risk? And I think you mitigate the risk by trying to play in the middle markets and build a product that's affordable. You try to, not just attract and pay your employees well, but you try to retain them by offering them a great, work environment. And then what you're going to have to look for is a way in which to retain your tenants even after they don't have the ability to pay any longer. And so we're looking for different forms of assistance to bring into our business. So a lot of factors play into this, and I think I could, as I said, I could talk about it for an awful long time, and that doesn't even, bring up the risks that we have today that present themselves, as a result of, geopolitical pressure and the environment that we're dealing with. As we started our conversation before this call, the environment that we're dealing with is one that's quite obvious through, the heat that we're incurring right now, and the fact that we have to keep these buildings running well throughout, extreme temperatures. So there are a lot of challenges. I think you hit on an interesting topic.